Welcome to another edition of Insurance Questions Podcast. It is Tuesday, July 23rd, 2024, and we are doing episode 111, or as Sarah would say, she's number one, she's number one, she's number one.
Oh my God, that was amazing! Yay!
Yeah. As you can see it on her screen, she's just full of laughs today. I just want to let everybody know that all the comments and statements by Eddie Buffalo, Sassy Stara, and Johnny Lowe, who is that? Donnie Lowe, are just for entertainment purposes. Everybody have a nice weekend.
It was pretty good. And don't forget to like, share, subscribe, do all the things on all the places. Bug Eddie on TikTok. Send us ideas if there's certain tax or insurance questions you want to know.
And download the videos or the podcast and hit that fan mail button and we'll respond to you.
There you go.
Don, I actually got to see Sassy Wow, what is my problem? Sassy Sarah
I know.
On Friday at a wonderful benefit for a church. It was was one of the winners from American's Got Talent, little magic show. Some of that stuff was pretty cool, though, Sarah.
Oh, nice.
But that church was flipping ridiculous. But what was nice is that all the money went to help people that don't have health insurance.
Yes. So it benefited not a church specific. It was held at a church, but it's Common Good Medical, which helps people in the Collin County area who does not have health insurance. And they're trying to expand services to provide like MRI machines and other items that people who don't have insurance, who can't afford insurance, can't afford to go to the doctor, to have everything that they have access to. And it was really awesome because they showed somebody who used their services, and it was the father who was diagnosed with cancer.
Oh, boy.
And so they worked with the family until his passing, providing all the different services that they could, made him as comfortable as possible, and helping them through that portion of their life, which is great that in this area, knowing how everything is, if you can't afford insurance, you know that there's at least a place you can go to get help.
Oh, yeah.
That's very admirable. Very admirable.
Especially Collin County is so flippin' expensive to live in. It was nice to see that people are actually giving back,
Right.
I think that's fantastic. It was a really nice uplifting evening. So, Sarah, this is your tax day. What do you got for us today?
So there's been a lot of questions that I've been getting this year specifically from multiple different clients, and I kind of wanted to talk about everything. So I do have some clients who have rental properties. They've had them for years. They're looking at possibly selling them because it's not as tax advantage.
Advantageous. How's that?
Thank you. I was trying to say the word and my brain was like, no. Apparently when Eddie hasn't had Pop-Tarts and doesn't have the energy, it just affects everybody. Eddie, go get some Pop-Tarts.
No, I'm telling you guys, I got bit by something here in Texas on Thursday, and I just have not felt great ever since.
Mm-hmm.
Yes.
I told him he needs to go somewhere. We got some dangerous bugs out here, like brown recluse. We got the black widow spiders. If you don't know what bit you and you don't feel good, I always say just be cautious.
So
but if it was one of those, you'd be a lot sicker, apparently, from what
I heard. I'm sure I'll be fine by tomorrow. So
that's crazy.
But anyways, they were looking at selling properties, but one of the issues that run into, especially with a lot of businesses, people who are depreciating vehicles, if they do have a business or equipment or anything, is that's basically a deferment of taxes. So, for example, if you buy a piece of equipment for $35,000, let's say you depreciate $30,000 of it and you decide to sell it, you technically have to do the calculation where you're adding back in that depreciation. And then whatever you sell it for is basically the gain. So that is one thing you need to keep in mind, especially if you have rental property, because of how much it is that you're depreciating, or larger ticket items. Of course, a vehicle, if you depreciate $30,000 of a $35,000 vehicle, and you're purchasing another vehicle for it, and your trade-in values aren't that high, it's not going to be as big. It's just not a lot of people are aware. They're just like, oh yeah, depreciate it, and I don't have to pay taxes. It's like, no, you're going to have to. The IRS is always going to get their money. And it always makes me think also back to the 1031 exchanges. You can always defer that tax and buy more property in a 1031. You can transfer it after you pass away in inheritance, and there's not really a tax issue. But if you ever move it out of that 1031, you're going to have to pay all of those capital gains back. So I always tell people, ask a tax professional before you make the decision to whether purchasing it or selling something. Just check and see how it's going to affect you tax-wise. But yeah, I've been getting a lot of those questions. A lot of people are trying to either sell items for their business, or they're inheriting a whole lot of stuff through family members and having to get the RMD or cashing it out completely, however it's written. Or they're selling rental properties and not thinking of how that affects them. I've had a few people sell either rental properties, land that they were going to develop and didn't develop. And they're like, oh yeah, why do I owe $50,000 in taxes? I mean, you made a big capital gain. Oh yeah, but I never used it. I never did this. I never did that. And it's like, there are things still affecting that. Yeah. So, I mean, that's the main part, is when it comes to any big ticket item that you're going to do, that even if you think it's going to affect you tax-wise, you'd rather ask and find out it doesn't than the other way around.
So in the case, like somebody that had a lot of land and they thought they were going to make whatever they were going to do with it, develop it somehow, and they don't end up doing that, they don't have to pay capital gains until they sell it, though, right?
Correct.
Right. Okay.
Correct. So here in Texas, I don't know about New York, there's flyers that come in the mail all the time of, hey, get your acre of land next to a lake for $90,000 or something along those lines.
Yeah.
I get them a few times a year, and I'm like, I don't want land 4 hours away that I'm never going to go to. But yes, that is something to think about, is when you do sell it, you are going to have to pay it. Now, as an individual, you having land, you don't get the depreciation that a business would.
Right.
So that's at least something beneficial to think about. And if you were to develop on it, that increases your cost in the land. And you just want to make sure that there is no cushion if you sell the property. For example, when you sell your home, there's a limit where it's not taxed.
Right.
Whether you're single or you're married, there's a portion that's just not taxed at all. So if you're underneath that threshold, you still whatever, Eddie. So for those who aren't watching the video, Eddie changed my tag from I'm number one to I'm number one only when Eddie isn't around. I'm always
and Donnie's is pretty good too.
I didn't even see that. Yeah. Olympic pickleball player USA.
Yeah. The only problem is I don't play pickleball.
Well, and we all know Eddie does not beat me on the number one level. I'm just saying, I'm pretty awesome.
So you get flyers in the mail, like to buy land. We don't get that in the mail. Well, I haven't. No. But they do have commercials on TV to buy property in Tennessee, of all places.
Oh, okay.
It's interesting.
Donnie, do they still have a lot of those "We will buy your house" advertisements on like poles and stuff all over?
Yeah, they do. They do. And actually on TV too, TV commercials.
Really?
From a local place. Yeah, a local real estate broker does that. You know, if you if the assessment went up too much and you can't afford the taxes, you know, we can work something out. And
I know a guy in South Buffalo. He ended up he had a big real estate place, and he's starting to do that now. You know, but interesting.
Yeah, exactly.
Yeah, so I don't watch a lot of actual TV. If I do anything, it's Amazon Prime or streaming of some kind. I don't see a lot of commercials. And then even if I am streaming and they start playing commercials, I'm not paying attention to it. I'm not a commercial watcher. So
there you go.
But we do have the little signs of "We will buy your houses" posted in a lot of different places around here.
Oh, sure. Interesting. Regarding capital gains, I heard something interesting on the radio yesterday, because they were talking about, well, if I'm not getting political, but this is just something that ties in a little bit. They were saying, perhaps if Trump wins the election, there were, I don't know if it's rumors or if they're just kind of throwing it out there, that Jamie Dimon, who is the CEO of J.P. Morgan, Chase Morgan, they said that he would have to divest all of the stock that he owns. And they talked about there would be a capital gains tax exemption where he would not have to pay any taxes on that. Either they were reporting it incorrectly or I misunderstood, because it was kind of like they were talking kind of fast and they mentioned that. And I was like, whoa, what a way. If he owns millions and millions of dollars in stock, and whomever, it doesn't matter if it's Jamie Dimon or somebody else, and they have to divest of the stock to get into treasury director, that that he would not have to pay, or that person would not have to pay capital gains. I never heard that before. I don't know how true it is. I thought that was, wow, that's pretty interesting.
Yeah,
boy, there's Googling away.
Yeah, I'm looking at Google because I haven't heard that, but it's one of those. I've heard a lot of different talks about what people would do if they were president and the new laws that they would enact. And you have to remember, income tax started as a tax on the 1%ers.
I know.
And it rolled down.
Yeah.
So anytime somebody says, hey, let's tax just the rich, I'm like, that's not how it's going to end up being. No. How about you just get rid of and all taxes based off of income and go straight to just a flat tax for everybody, or getting rid of deductions and just make it very plain and simple and have a lower tax because you're literally taxing everything. My thing.
But that was interesting that when I heard that, I thought, wow, because
and
like for that individual to become treasurer secretary.
Yeah, and I've also heard the issue of they want to get rid of depreciation. Like I've heard so many different things coming out, and my thing is they're never going to get rid of depreciation. There's going to be too many people lobbying against it because it is such beneficial depending on what you're doing. So if you're a large company and you're purchasing an entire building and you're paying millions of dollars, you get to depreciate that over 30 years, 15 years, depending on the type of building it is, or type of equipment, or the different rules for whatever you purchase.
Right.
But it's a lot of money that offsets your profit. So they're not.
Plus, it's money going into the economy, and there's all those other parameters.
Right. Which is why they give a lot of
people and
tax. Yeah, well, and that's why they give a lot of tax credits to businesses, is because they want a lot more people being hired and jobs created. So when people are getting upset that businesses get these tax credits, it's because they're adding value to where there's more money in circulation in the area, which is much more beneficial than if that company's not there.
Right. Yeah, exactly.
Do I think they need to pay zero taxes? No. I think it needs to be even, but I like more of a black and white kind of split than all these potential grays.
Yeah, a lot of gray.
A lot of grays.
As you well know.
Yeah.
That's crazy. Yeah, I thought I'd bring that up because I heard that, and just wild if that were the case, I just wasn't.
Oh yeah. Well, it's interesting to hear other people's perspective on what they would do or what they would think would happen. So it's nice to always have those conversations, but then it's like, unless it goes through the tax court or Congress or the IRS is setting out new rules, it's kind of one of those.
Yeah, but the way they were talking.
Things.
The way they were talking about it is that that's what the rule is, evidently. Mm-hmm. Again, maybe I misunderstood it. And they kind of like brushed through it kind of quick. I'm like, oh, wait a minute, you know?
Yeah. To my knowledge, you do not get
an exemption.
Gain exemptions, unless you got the stock as a stock purchase as an employee, but then it's still the same amount of, you get what it was purchased for, and then whatever you sell it for, that's your difference.
Right. Yeah, interesting.
And if I'm incorrect, I will look it up and clarify, but to my understanding, from my experience, that's how I know it is. So if I know Eddie's been saying on TikTok, a lot of people are like, "You're full of crap," and da 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 da. And I'm like, unless you give me specifics, because I am human, I may say something incorrect. Give me specifics. I'm cool with that. Yeah. But that's why I always say too.
We never get patted on the back when we're right.
No.
Yeah, I fact checked that. Your name isn't Eddie Buffalo. It ain't Sassy Sarah. It ain't Donnie Lowe. I checked that stuff out.
Right.
Maybe it's time to give another disclaimer.
Right. And I think it's just people on the internet just love to argue. But my thing is like, if I'm wrong, okay, I totally understand that. That happens. But that's another reason I always say, ask your tax professional. Because that's very important.
Absolutely.
And it may be different for you. So something else is with tax courts. New York may have a different rule than Texas, just because those are two separate areas, two different regions.
Yeah.
And it just all depends. I do not like that. I like it to be consistent. So that's something else to keep in mind. It's like, hey, I can speak of what happens in my area and my knowledge of what's going on, but that doesn't necessarily mean you couldn't do something in yours, because there might be a case that says, yeah, no, you can do this, when in mine it's no, or vice versa.
Right.
So yeah.
Yeah, crazy. So anything else you wanted to talk about for tax questions or tips?
No, not really. I can't think of anything else. No interesting article. Well, actually, I'm not even going to say no interesting articles came up. This weekend, I was either outside at a car wash all Saturday because my son's Boy Scouts was doing a fundraiser.
Oh, nice.
Or Sunday, I was just kind of like, I was outside all day the day before. So I was like, I'm doing nothing. I'm not looking at anything. I'm not reading anything, because who knows if I'm going to retain it.
You reached your maximum point for the weekend.
Yeah, I mean, we were super, super blessed that it was not over 100 degrees. It was supposed to be cloudy all day, but the place that we went to provided us with a tent.
Oh, nice.
And the boys did really good. So we have, with our Boy Scouts, my son is younger. We have two younger people. We have some older kids. So the older kids were doing more of the cooking and passing out the free hot dogs that the car wash gave us. The younger kids were telling people about it, so we got more donations because the cute kids were telling them about, hey, you need to do this car wash. We get a good percentage. So they did pretty good. I'm trying to talk them into more fundraising, because I'm like, thankfully we live in an area where a lot of the people you talk to, they're like, oh yeah, I was a Boy Scout, or my kid was a Boy Scout, or my daughter was a Girl Scout, or what. So they love just helping the kids out.
Yeah, so. That's great. That's wonderful.
I've got a tax question for you, Sassy Sarah.
Okay.
So why are there 9 states in the United States where you don't pay state income tax, and how can they get away with that? And especially in a state like this in Texas, there's no state income tax, but every turn around, they're building something new. Where's all the money coming from that? And I guess to keep it just plain is, why are they allowed to have no state income tax, the 9 states?
Well, so the states make the rule, not the federal government. So it comes down to more of the states who have no income tax get their money elsewhere. That's the biggest thing. So for Texas, we have, of course, the lottery like most states have. They also have property taxes. They get their revenue elsewhere is the main thing. So they don't have to tax somebody's paycheck. Why? That's a good thing I can look into, because I've never questioned it as why. I'm just like, I'm not going to move to a state that has income tax because I'm not giving you more of my money. And if one thing I can also look into, because now I'm intrigued and I'm asking questions of my own, it would be, are the ones who are charging sale or income tax, do they have higher property taxes? Do they have higher sales tax? Are you paying more taxes every single place and an income tax, or is everything cheaper and you just have an income tax instead?
Well,
that would be a good comparison.
Speaking for New York, living in New York State, I think the state sales tax is around 4%, and then you've got the county sales tax on top of that. So in Erie County, where I live, I think the sales tax is 8.75%, total. Regarding like in Florida, there's no state income tax in Florida. They get a lot of their revenue from tourists with sales tax. And
that makes sense.
And the sales tax is, I think, a little bit lower overall than it is in New York State, actually. I know the property tax rate in Florida is lower than in New York State as well. So that when we say the property sales tax, it's the town tax, the county tax combined, and then there's a separate school tax in New York. In Florida, it's all just one. And I know just living there for 1 year, it was much lower than New York State.
Yes. And so an example, I just Googled it. I'll do a more in-depth one later. But like Rocket Money, I'll use their website. They, of course, finding taxes, other sources, but also tapping in abundant natural resources. So I know Texas, we generate a lot of power, oil, all of that stuff, and we ship it out to neighboring states. So we don't keep all of the oil. So when we're going through a crisis for something, it's because we've already given out everything else that we had, which is why you'll also hear Texas, some people constantly say, oh, we need to succeed. Technically, we have all the resources. We would kind of be fine.
Yeah.
But we would affect all the other states that we ship the energy to. So, there's that. So that's something to look into, or I'll look into a little bit more. But basically, their thing is we're not going to tax you more because we can get revenue elsewhere. And I know in Texas, they're also looking at lowering property taxes to where it's not as high. But you also have
Good luck with that one.
Right. Well, you also have the counties that are also raising money. So
yeah, your county is one of the most expensive, Collin County.
No.
It's not one of the highest in Texas?
No. It is high. I'm not going to say it's the highest. So there is, and I don't know about the southern part of Texas or other places. I just know about the Dallas area. There is a county, I can't remember if it's Rockwall it's Rockwall County. They have the highest property taxes. And then there are some places like Richardson, you're paying Dallas tax, you're paying Richardson tax. Depending on the area, you could also be paying a different county tax. So some places are getting hit with 2 or 3 different counties, depending on where they live.
Crazy. That's crazy.
So Collin County is on the higher end, but it's not too bad. I would always say if you have property taxes is to fight your tax rates. If you think it's increasing too much, we were having that issue, especially when everybody was trying to move here last year, where property taxes were going up, and it's like, no, we're not going to play that game.
Now, I do have another question for you, Sarah, and because I know you keep up on the news and everything going on in the tax world. Now, have you had to start studying about Project 2025 in case the Republicans take the House and the White House? Or is that something that you're going to have to delve into if it happens?
So I've been following it. Yeah.
Mhm.
But so my thing is I've been following it, but I'm not doing any in-depth actual tracking until we're a little bit closer. And that's just because they can always say one thing and something else happens, and I don't want to get misinformation or and especially with AI writing a lot of the material that you see now. I always try to wait until a little bit closer when they say, yes, this is actually happening. It's coming from Congress. It's coming from the IRS. And I know it's going to be solidified as new information that I need to pass on to my clients.
I don't think those aren't policies. I mean, those are ideas that this certain group of people.
They're looking to overhaul the whole tax system. How difficult would that make your job? I guess that's what
they've been saying that for decades.
I know.
They've also been saying that they want to abolish the IRS.
Yeah.
My thing is, like I've said it many times, I'm for smaller government, and if I lose half of my business because we got rid of the IRS, I'm not going to be sad. I'll figure out another way to make money. It's not that big of a deal to me. The one thing I am concerned with is the IRS is starting to take on doing tax returns and for free.
Yeah.
And I'm all for the people who have straightforward returns with their W-2s. They don't have any investment income. And I've referred people like, hey, just go to the IRS website. Like, it's so much easier.
You do it right online. Is there a fee for that, Sarah?
There are they're expanding it to include more states. And I don't know if it's going to be all 50 states next year, but I know that they are expanding it because they just did the pilot with just a handful of states.
Is there a fee on that, is what I asked?
No, that's for them filing it for free, which is why I've been telling people to go. Because if you have a more complicated return and it's going to take a few hours for me to prepare it, I can completely understand that. If it takes me 10 to 15 minutes, I feel bad charging you my minimum when you can just do it free online because you just have a W-2. A lot of my clients are more of, I'm preparing their return. I'm giving them tax planning advice for the following year. They reach out. I answer questions, stuff like that. Like I deal with them, not super complicated. I have some that are, but they just have more questions. They have more things going on than just W-2, pay the taxes, get a refund type of thing, or your standard deduction or your child care credits. So my thing though is with the IRS, if they're going to expand it to take all the tax preparations eventually, let's say over the next 10 years, because it's kind of like you have the IRS already getting the information and prepping the return, but are they really going to look for all the tax savings and deductions where you don't have to pay tax?
Exactly.
Because that kind of defeats the purpose of them. Like they're there just to generate revenue. And I think that's kind of a misconception that people have is they look at the IRS as an extension of the government instead of the IRS is a business. It is there to generate revenue. Internal
Revenue Service.
Yes. Well, and then I've had clients come to me where they haven't filed in like 3-4 years. And then they get a letter from the IRS saying, hey, you owe us $25,000 because all they do is take the income, subtract the standard deduction, and that's it. So you have to either file or argue with them and say, no, I get all these other deductions.
How does it get that far? 3 and 4 years down the road without filing your taxes? That just blows me away.
I know.
It's more common than you think.
Wow.
It is way more common than you think.
They must have to pay a lot of penalties, right?
A lot of penalties and a lot of interest. So the IRS, the reason it's called penalties and interest and not fees is because fees are capped by Congress. So if you haven't filed, there's a penalty for not filing on time. There's a penalty for not paying your taxes on time. And then there's interest that compound for every month that you're late.
And how's that interest rate determined? Do you know?
It's determined by amounts. Well, I can look at that up real quick.
So they could say, well, we're going to charge you 20% interest. Yeah, I'm going to go to the loan shark down the street, borrow the money from him, and pay 15% or whatever.
Yes, and of course, there's different types of penalties. So I always go to the IRS website. It gives you a lot of information. The problem with the IRS website is there are so many different scenarios and so much information. It's hard for people to know where to look.
Yeah, you can get lost.
You can get lost. They even have calculators for everything. You just have to know exactly what you're looking for to find it.
Yeah. So that's www.irs.gov, Gov, right?
Correct.
Okay.
Yes. And I'm trying to see if there's an amount because, like I said, it all varies depending. And then they charge you, let's say you're on a payment plan. If you owe $10,000, you're paying interest every single month, even though you're making payments until that balance is paid in full. So something I always say is if you owe the IRS money, if you can pay it off with a credit card or something else, like getting a bank loan or something, that would be better than paying the IRS. And that there's two reasons why. One is if you miss a payment, it causes a whole lot of other issues, and the IRS is not somebody you want to mess with. And then two, it may even be cheaper if you just do it that way than paying the IRS.
Well, a credit card, I mean, you can have interest rates as high as like 25, 28, 29%, right?
Yes, but it's not being depending on the type of credit. I know that they also have some that are zero interest for X amount. Right. And you can also pay more or less depending on the situation. So my personal opinion, I would rather pay the credit card company more interest than having a balance owed to the IRS.
Yeah, that's true.
That's just me personally, because I would be too terrified of, yes, I give you my bank account to go through or my credit card. You could pull it, they could pull it on the wrong day, or something happened with my check that's not deposited in. Or if I put it on a credit card, my credit card is flagged for fraud and locked, or it has to be changed because I lost it, or so many different things can go into play. I'm just like,
it could get crazy.
I will make sure that doesn't happen. And if anyone's ever curious, there is a calculator on the IRS website for you to put in your income. If you have rental property, if you're going to sell an asset, how much taxes you should be paying throughout the year. So there's all the different calculations that you could possibly do, no matter how complicated your return is. There are questions on that calculator that can walk you through that. In case you don't want to go to your tax professional and you just want to say, okay, how much am I going to owe? If your information's similar to the year before, you can also just look on your tax return because it gives you estimated taxes you should be paying throughout that future year.
Yeah, that's true. That's true.
Now, that is an estimate, so if rates change, don't be mad at your tax preparer.
That's right. Nice disclaimer.
Yes. Because it's always funny when people ask me that. They're like, oh, so it's only going to be this much for next year. Yeah, depending on if everything stays the same as in what you make, the taxes you've paid in, as well as with the IRS, no rates change. It always changes.
Yeah.
So when you're doing taxes and calculating them in the state of Texas, do you have to use a Texas Instrument calculator, or can you just use a regular calculator?
So me personally, I have a tax software who does it for me because.
Oh, okay. So
yeah,
you don't.
I don't have to think about
Rebel. You don't use Texas Instrument. I get it.
Are there still radio stations in Texas?
Huh?
Radio?
Yeah, they have TI. It's in Richardson. It's not too far. So yeah, it's supposedly a really great place to work and be on as an employee because they pay well. There's perks and benefits, and
I bet you get free calculators.
You probably do.
What do they make there?
No company's giving away free calculators.
I still use my old man Casio.
Ah, look at that.
I use a computer, or if it's too complicated for the computer calculator, I'll grab Excel and start building out all my different cells if I need to use a calculator.
Crazy.
So what else you got? Anything else, or are you done?
I think I'm done. Unless you have more questions.
No. Okay, so we're gonna wrap this up. Good information as always.
Yes.
And remember, if you want to work with people that are just like you can reach us at www.ebiagency.com, 716-306-2020. I'm Eddie Buffalo for Sassy Sarah and Donnie Lowe. We will see you tomorrow on Insurance Questions Podcast. I haven't gone over the viewer questions yet, Don.
Okay.
So hopefully we'll have a bunch tomorrow.
Perfect.
And until we see everybody. Thanks again, Sarah, for all the good information. And we'll see everybody tomorrow. Take care.
Ciao.
Okay, bye.